multifamily. So you'll see me, talking a lot about it if you're like friends with me on Facebook or follow me on Instagram at Investment Real Estate AZ. We sell a lot of it. So we're going to talk about everything from a duplex to all the way up, but we're mostly going to focus on like what you guys would see, which would be kind of like your 4 and unders, because that's what you'll see in the MLS and stuff. So a little bit about me, like what makes me an expert. I'm not. I'm just sell a lot of it. It's just kind of like what I fell into. I have a finance background from the University of Washington, where I'm from in Seattle. And then I went to work for Boeing, and then I went to work for Microsoft, and I decided cubicles suck, and went into what my hobby was, which was real estate. So that I could be at home more for my kids who don't care now, but they did at the time. And it just became more flexible. I'm too extroverted to sit in a cubicle anymore. So I have a business management degree. I have a green belt in Six Sigma, which is a statistical analysis, master certification in project management. If you've ever ran any kind of deal, I don't care how many doors it is, you are a project manager. And then carry a project management certification. I'm originally from Washington. I have 2 daughters. I'm a housewives junkie. Mostly OC, Beverly Hills, for anyone who follows it. I'm just saying, I'm a West Coast girl. I like to turn my brain off at night, and that's kind of how I do it. I'm like, what are they wearing? Why does she hate her? God. And then my background, the corporate, educational kind of stuff. And then I'm also the host of Smashing Through Walls. It's a podcast where we talk about commercial real estate. Like my next guest is... next Friday, we're having the city of Apache Junction come in because they just annexed 242 square miles. And what does that mean? What do they need? And so it'll be really cool.
What is it called again, your podcast?
Smashing Through Walls, because I don't just want to break the glass ceiling, I want to smash the walls down. So why work with us? Well, we're awesome. You get people like me and Erin. But also because we take care of our agents. A large part of what we do is based on you guys. It's based on residential agents, and you get that like random, like my client just moved here and now they want to build a restaurant here. Like I don't even like where to start. Call us, we'll help you, we'll walk you through it. We paid almost $200,000 in referrals last year. Our oldest referral was 6 years old. We had to like track them down through 2 brokerages. So we have integrity. We make sure everybody's taken care of. We would just never do that. Then you get to learn about the transaction too, to the most that you want. If you want to learn about multifamily and you have a multifamily deal you want to bring me, we can sit next to the table at each other. But if you were like, that is too much for me, well then that's fine too. Because the dangers of practicing outside of your scope are, your brokerage may not back you up. So I had an instance where one of my clients sold, he purchased the duplex through another agent, but he sold it through me. And when it came time for the settlement statement, he was like, what are these deposits? And I'm like, well, those don't belong to you. They belong to the tenant, so they have to transfer with the sale, kind of like how he was talking with the reserve. And he was like, well, I didn't get deposits, so they're taking my money. And I was like, I can't help you. That's not how that works. So thank you. I'm sorry if that happened, but that's not how that works. So imagine if that was times 200 doors, right? Now there's a lawsuit. Your broker's going to say, did you loop in any multifamily specialists? And if your answer is no, then they're like, hey, we provide you a commercial division. You should have tapped into that. So then they won't back you up, and your E&O won't back you up either. So now you're being personally sued. Did anybody need any of these? Here, can we pass them? Take one and pass it back. So that's why my home group has us, is to take care of everybody, but we can take care of anybody. Like Erin said, where do we find our stuff? We find it in the MLS, like you guys in CoStar, which is really expensive. That's expensive. Crexie is free though. I don't care what Erin says. Crexie sucks. So Crexie has listings of mine that are like over a year old, and we have to like call them to ask them to remove them, and they won't because they get lots of clicks. And they're really excited because they're like, a lot of people click on those. We don't want to remove them. I'm like, but I sold that like a year and a half ago. The price isn't even like applicable anymore. Now I get tons of calls because I want that 5 unit for $700,000. Well, so do I. That doesn't exist anymore. And then they think it's me. It's not me. It's Crexie. So it's a good lead generator, but So what's the difference, right? We kind of touched on that a little bit earlier. Really, the difference is one door. So your residential is 4 units and under, and your commercial is 5 units and up. But why does that make a difference? Well, because with residential, it's financing and appraisal. So your financing is residential financing. It's just like if you sell an investor another single family home, if you sell them a rental, their vacation home, it looks just like that. It's based on comps, and if the one next door sold for that much, then yours next door sells for that much. They don't take account into rents. They don't take account into value add. They don't take account my pro forma, which always pisses me off because I work really hard on those. But they don't take that kind of, it's literally just like a house. So that's why this 4 units and under is always super sexy to investors, because the interest rates are lower, there's no reserves, like they can just like buy up fourplexes all day long. Once you get into commercial and you get into 5 units and up, the financing becomes different. There is no 3% down or 5% down program. It's all investment. It's 20 to 30% down. There can be reserves depending on how many units the building is. It depends on a lot of factors. So you're talking a lot of money, right? And that's literally once it hits 5 units. It's so odd, right? It's like, how do we pick that? I don't know. But so that's where it goes. And their comps are ran on, or their appraisal is ran on, what does this property perform at, right? So what's its cap rate? What's its NOI? And that's how they look at it. That's why your documentation has to be really good. There are some lenders that we work with that I can get them to take my pro forma for their lending, but they're pretty far between. Usually we have to do some kind of private lending or syndication or something like that to take it as a pro forma level, turn it into what we call a performing asset, and then refinance it into as a performing asset. I also take questions, so if I am cruising through, yes sir.
But there's a difference between what the city sees as multifamily. Sometimes some cities say 3, okay, now you have to have X number of parking, you have to have a common area, 4, and then obviously bigger, it starts adding like common areas and things. Some cities say that over 3 units, now for me it's a commercial. So you're saying this is mainly financing?
This is mainly for financing. That would be a zoning issue. So then that comes into like city play in terms of how many parking spots you can.
You're talking
I'm strictly financing, because zoning can get wonky and weird depending on, is it in county, out of county, is it which county, which city, which zoning in the city, and so on and so forth. So yes, it can get a little into the weeds.
Because if you do add value in the full permit, then the city says, oh, you're over 3 units, I want you to put X number of parking, and EDA parking, and then a common area, and you're like,
that can be a zoning issue. Yes.
A question. I have a buyer, let's say he's a cash buyer. We see one home that looks super ugly, but it's a big lot. Can we just buy it and build 4 or 5 units, and let's say ABCD, and he rent it out to 5 families?
So that's a zoning issue also. It has to be zoned multifamily in order to do that, not for a single family residence. And so depending on your city, if you just Google like City of Mesa multifamily zoning, it'll kind of start to break it down into what that looks like. But it depends on your zoning. So no, you can't just like, wow, this is a big lot. It has to be rezoned or get a variance or something with the city. You can't just like throw people on to live there.
So if it's multifamily, then you only can build 1 single house.
So if it's zoned multifamily, you mean like the structure is on its own. You could build 4 of those, like depending on the zoning, like 4 little 2-bedroom, not attached buildings. You could do that. Or like if you have a lot that is like, some of them are really old, like especially in Mesa, and they just have 1 on them, but they're actually zoned multifamily. You can put another property on the back half of that property. It just has to have like egress. You have to be able to park there. So then again your zoning comes into issue to know like, where can we put people? What are our setbacks and stuff for multifamily? Does that make sense?
Talk to a city.
Yeah, really it comes down to the city and what they say. They're always the final authority, because you don't want a notice posted on your door because then you have to stop everything.
Yeah.
Yeah. Okay, so this looks super familiar, right? This is our MLS. This is one of like my listings, okay? So I'm just throwing that out there because this is all accurate. If you go on the MLS and look at multifamily, there's a lot of garbage out there. Okay, so like what are we looking at? Like what does this mean? It's a little bit more detailed in your packet, but like first and foremost, like Aaron said, is this on actual or is this pro forma? Okay, so pro forma means I made up these numbers. How? I can justify how I make them up, but like can you? Because if I call you on this, I'm going to question you. If it's actuals, it'll say provided by owner, or tax records, or tax documents, or something like that. This means I have like made stuff up. So like adjusted gross income, so $6,600. So I am telling you that the 2 bedrooms can rent for $1,100. Like that doesn't sound outrageous, right? But it probably means what they're currently being rented at is like $800, $750, $900. So it means that there's what we call value add there. So there's room for you to add value and then make it perform at a 6.44 cap. That doesn't mean that's what it is performing at, though. It probably is performing at like a 3 or a 4. I've sold them as low as a 2. And like, how can you do that? Well, if you listen to everything I say and you do all the things I say, and then you can bring the rents up to this and it can perform to that. When people call you and they talk about investment properties, I usually hear them ask about cap rate or cash flow. Well, I just wanted to cash flow. Well, your cash flow and my cash flow are 2 totally different things, right? Secondly, we are not a cash flow market. We are an appreciation market. So that's why you see things selling on pro forma, because people are banking on the fact that Arizona will keep growing, people will keep moving here, that this is already old, because that 1,100 rent, that should actually be 12 or 1,300 now. So they're counting on that yeah, that may not perform this year, but next year it's gonna, when I can raise the rents, and the year after, when I can raise them again. That's what that means. Ohio, Texas, North Carolina are a handful I hear people buying in. Those are your cash flow markets. But it's because the property doesn't appreciate. What you bought at $500,000 this year is worth $500,000 next year. There's no increases. You guys have seen it. What people bought $500,000 for last year, even with the softening in the market, is $550,000 this year. They don't get that there. Everything kind of stays the same. So their cash flow is really important because their property and their rents are not going to appreciate. So when you're in the MLS, this is what you want to look at. Number 1, how are you getting your numbers? Are you making these up, or are they from the owner? I am making these up. They're accurate, like that's what it should perform at, but essentially that's what it means. It means this is what it could perform at. Then you want to run through these, right? Here's your vacancy allowance. I use 0.05 because that's our industry standard. 0 is what you'll see a lot. I think A, because they don't know what vacancy rate is, and B, it makes your cap rate look better.
How does that translate into days, or like out of the year vacancy rate percentage? Like you're predicting that it's going to be vacant for how many days?
Like 5, essentially, yeah. So it means like how long will it take you to refill this? Yeah, and sometimes if like you have a really crappy property, it could be a lot higher because you need to do like remodeling, you need to do things like that. So what I'm telling you with this one, by using the low vacancy rate, is that you won't have to remodel these units to refill them. You just need to increase the rents. That's all you need to do.
Carla, do you want to talk about what percentage of the time you actually see that stuff filled in?
Oh, like when I see my listings, I see it filled in. There's like some of the other multifamily brokerages, I'll see it filled in. But a lot of times this all says 0 everywhere, and it makes me insane. Yep.
This is like us pricing houses. How often does the owner come back and say, you're crazy, those numbers have to be higher? And
I've had it on both sides. I had a 5-unit guy who was like, there's no way we should sell this for over $775. Like how is that even possible? Nope, I want you to list it at $750. Okay. And then I've had people like, nope, my building is worth X, and I mean,
Same.
same objections, so then it's my job to see what I can do in here to make that happen, right? Like, oh, let's see, I bet if you painted this and you added a backyard structure, you could now, do more stuff kind of thing. Value add is where you add value, right? And you can increase the rent for that. So you are a tenant, you have a 2-bedroom apartment, and your budget's $1,000, let's say. And which one are you going to pay $1,000 for? One with no washer and dryer, or one with a washer and dryer, right? So if it has no washer and dryer, you need to add a washer and dryer, or hookups, or something like that. Covered areas, I mean, all very similar to residential. These are houses, they're just smaller, so you're looking for all the same things, right? That's where you can add value, and then, which means increase your rents.
I think the reason too I wanted to call that out, and this is gonna be a big plug for Carla, and no, she didn't pay me to do that, is because if you have zeros there and you guys don't know what questions to ask to get the data or how to do that analysis, you are not doing your job to your client, right? So call Carla, call her, and anyone on the team, but I mean, call her and go through to at least partner with her on what you should be asking and what information you should get. So one, you don't look silly to the other party that you're communicating with, who now is going to eat you alive if they think you don't know what you're doing. But two, you're doing your client a better service.
Thanks, Susan. So these numbers come from this. What does the tenant pay and what does the owner pay? And why is this important? Because the owner wants to pay less, right? They want the tenant to pay more because that makes the property more valuable to them. That actually affects your NOI, which we'll go into a little bit later, which then affects your cap rate. So what I call our unicorns are one where the tenant pays for everything. And they're out there, but they're really valuable because the landlord literally just turns the porch lights on and that's it. So this one, the tenant pays electric, gas, cable, which is super common, and the owner pays water, sewer, trash, super common. So if you call me and you ask me how much the electric is, why am I going to chuckle a little bit? Because I already told you right here, right, that it's going to be zero. So that's just why it's really important that that's filled out, or that you know what you're looking for. Like, why does that say zero? Oh, because the tenant pays for it. So if it says the owner pays for it, it should have a number there, right? So this is all important because this is how you calculate your NOI. And like you heard from Erin, your NOI is how you calculate your cap rate. And then that's subjective too. Because if someone doesn't want to install washer and dryer hookups, then it's not as valuable as I think it can be. And then therefore the cap rate's lower, and then therefore they don't want to pay what I think they should pay for it. So your gross rents are, in this case, pro forma, what they should be, or what they are if you're talking about actual. So it's important to ask what everybody pays in rent. And then we create what's called a rent roll, which is literally an Excel spreadsheet that says, like, tenant A pays this amount, lease started this date, lease ends this date, responsible for what utilities, so that you can start doing so that we can pick apart the numbers and do our own calculations, right? What your vacancy rate is, and then what your operating expenses are. Yes, sir.
So you get those from the landlord, or you get it from the tenant, tell the tenant when you fill it?
So, no, you get them from the landlord because they come from the lease, and the landlord should have all the leases and should provide those on sale. I get them before we go under contract. I get them when I'm signing the listing agreement. I won't put it on the MLS until I have leases in place. Because that gives you all your information. That tells you what they pay, it tells you what their deposit was, it tells you what they're responsible for. If that does not exist, because that happens, you have to have what we call an Estoppel. An Estoppel is like a makeshift lease. It's like a one-pager that just says, I, tenant Joe, think I pay this, I think I pay for these utilities, and I think my deposit is this. And the two signatures mean that they agree. Yeah, and I own the refrigerator and the washer and dryer. That means they agree. If they don't agree, which happens, then guess who gets to sort that out?
That was the next question.
Yep.
You get a lot of inaccurate leases or no leases.
Yeah, or I get tenants that are like, I never paid a deposit, or I paid $2,000 for my deposit. Well, your lease says otherwise. I can't help you. Like, I have to go based on a contract that you signed back on whatever date, and if you disagree with that, you're just going to have to take it up with the new owner or the current owner. Because I have a contract that says otherwise. Like, I just had one that closed this week, and the tenant and the previous owner now, my seller, did not agree on the deposit. So we had to come to an agreement and amend the lease with new signatures and an addendum, so that then it transfers over. So if you don't address that, you're gonna end up eating it.
But if it's on the lease, it shouldn't be.
But if it's on the lease, right, then you have a contractual document, because that's what title's gonna go off of when they're doing the settlement statement. They're gonna go off of the lease. So calculating NOI and cap rate is all just a bunch of math, is all it is. You can Google the formula. I mean, you can look at it. Really, it's not the calculation that's hard, right? It's just this divided by this. It's what goes into that calculation. It's what questions you should be asking. And if you go on the MLS and you look through that listing and you look at all those bullet points, those are all the questions you should be asking. So the answer's in front of you. You just need to be able to sit down and ask them those questions.
Will you encourage, for the information that's really not there on the MLS, will you always encourage your clients to talk to, they always say don't talk to the tenants, but to talk to the tenants to understand certain pieces of information that may be an additional expense that is not necessarily shown on any of their documentation?
I will talk to the tenants.
Okay.
I don't like my clients talking to the tenants. So here's why. I've had tenants blow sales. And the reason why is because they're scared. That's what it really boils down to. They think a new owner is going to cut, so they don't even know it's for sale until like it's under inspection, right? Until it's sold, until we're walking through, taking pictures and stuff like that. And they got that phone call, hey, in 48 hours, it's going to be inspected. So now they're nervous. They think they're getting kicked out. They think they're losing their home. They think their rent's going to double. They hear all these horror stories on the news. Like, they are really freaked out. And you have one of two types of people. The first type of person, you walk in and that place is immaculate. She cleaned all night to make sure that she takes care of her unit so that her kids don't have to move. Like you have that person. Or person B is like, let me tell you all the things wrong with this building. You don't want to buy this. And one of my first multifamily deals was a triplex in Tempe, and that's what happened, and that sale fell apart. And because my buyer was like, well, I don't want this mess. So
always a surprise.
Yep. So now I don't let them talk to tenants. They can see the contracts, they can see, and you don't want fair housing to apply either. You don't want them to not like the current tenants that are in place for whatever reasons that they have, because they have to abide by their lease, and you don't want them not renewing them for any kind of way. So all you need to know is that tenant A pays on time, here's their rent, like that's all you need to know. So I usually handle everything. Most of my buyers don't even want to walk through, they don't care. So, before I go into frequently asked questions, do I have any questions? I'll tell you what the frequently asked ones are. So like per door is just literally what it sounds like per door. So like if you have a duplex and it's $500,000, that means it was $250,000 per door. So sometimes you'll hear us talk like per door rates, not cap rates, like like Mesa's trading at like $170 a door, or things like that. So you'll kind of hear that because that's how we do quick math. Capital expenses are big ticket items. So when someone calls you, if you have like a random duplex, they're gonna say, what CapEx is being done? Like we have a 4-plex right now, and I say that means it's had a new roof in 3 years, 2 new HVAC units, 3 of the units have been remodeled. Okay, those are all big ticket items that now I know I don't have to deal with for a few years. Yes, ma'am.
So how would you handle if you had a seller that the expenses were seemingly very high because they didn't necessarily account for them as big ticket, and so therefore obviously the performance looks low, or you look like you have operating expenses at 60 to 70% of your revenue or
Right.
more?
So I'll ask to see the P&L, which is a profit and loss statement from the previous year, so that I can find out what those are. Because if I see that they're the HVAC units, then I'm like, oh, that's why your expenses are so high, because you had to replace HVAC this year.
So keep that in mind, you guys, because again, like if you're not comfortable, and this is no knock on anybody, but if you're not comfortable with every line item detail of the P&L down to like what type of accounting it is, what type of receivable, depreciation, the analysis on that kind of stuff. Like, if you don't have that background, don't be afraid of that. Just get the right people on your side to help you. I'm just saying.
We don't even typically let people like come on as a commercial agent until they've done a few like commercial deals, just because they can, we need to know that everybody understands the lingo, that they're comfortable talking, so we have people like pair up. So obviously Lisa knows what she's talking about, she's on our team, she still pairs up with us. One of the ways commercial works a little bit differently is we're not like lone rangers all the time. We always pair up on sales, whether that's a demographic issue, like I have one in North Phoenix I don't want to drive to every day from Mesa, so I pair up with someone near there, things like that. Do you have a question?
What is a good per door rate?
Depends on the city, and not even on the city, because Phoenix is weird, right? You cross the street and now you just doubled your per door rate, so it really depends on the area.
Okay.
And that on the MLS is fairly easy to do, because you can kind of run some, you can draw a circle and see what things are selling for in that area. Yeah, so it would really be like area specific, because it's rent specific, right? GRM, oh yes ma'am.
How are you finding that short-term rentals are impacting all of these numbers?
So there are people that sell on pro forma with short-term rental numbers, and then that's up to the buyer to buy into that or not. I've had
just because those are changing so quickly.
Right.
I wonder if that's something that
a lot of your multifamily or smaller multifamily doesn't have an HOA, so it becomes desirable to short-term rentals, but then as soon as they look at the areas that most of those are in, they don't want short-term rent them. So if you tell me on pro forma that you can get $3,000 a month in Apache Junction, you better be able to defend why you're doing that. You better be able to show me a P&L that says that, hey, for a year I have rented this out consistently on VRBO or whatever, and this is what we're generating. So one of the things I do when I make up my rent numbers is I subscribe to Rentometer. It looks like Rentometer, and it'll tell you, you can type in an address, an area, and it'll tell you the average rental for that. And then I'll go on like apartments.com and be like, okay, what are they using for that? Okay, well they're using like mega complexes with a pool and tennis courts. Okay, I'm not gonna get that, because this is a fourplex, right? GRM is gross rent multiplier. It's just literally another calculation that people kind of use off their hip to see if just to kind of do that first pass, hey, here's a list of everything for sale. Okay, first pass, nothing with over a 12 GRM.
So that's the sales price between gross rent.
So if you're looking at what's listed, that would be listing price, right? Because sales price can be different. ROI, we kind of talked about, that's your return on investment. Talk about what a good cap rate is. There's no such thing. It's so subjective. I have physicians that they don't even really care what it's performing at, because they're just going to get a property manager. They want to defer their taxes. They need to bring down their taxable income because of their businesses. So they just pick them up just to bring their tax bill down because they have good depreciation. That's the other thing with residential versus a 5-unit. Residential, you can depreciate for longer than a commercial property. Not that we should be talking about taxes, because none of us are now. But it's still good to know, right? Just kind of mental notes, so that you can talk to your accountant. Make sure you're asking about depreciation. Why can't property be viewed before it goes under contract?
Tenant laws.
Not only tenant laws, because you have to give 48 hours notice, but also just tenants. You think a tenant, would you want people walking through your house when you didn't authorize it for the sale? No. You think they're going to blow that sale? Yes. So your job, if you're listing anything, or if I'm listing anything, is to take very accurate photos so that no one needs to walk through it. Nope, my listing's so good, you don't need to see it. So you can make me an offer, and then upon inspection we can walk through it. But then your offer better be solid, and be prepared for me to question your money, question your 1031 funds, question your financing. I question everything, because I don't want this to fall apart, right? Nobody does, but when you start freaking tenants out and then you have to freak them out again because it fell apart, it's kind of a disaster. So that's why it can't be viewed till after it's under contract, unless randomly there's an empty unit. It's just, in this market, that's not usually the case because everything's rented. Yes, sir?
Rather than surprise a tenant with a letter or phone call saying there's an inspection in 48 hours, you let them know in advance, properties being put on the market. We will contact you for an inspection only if there's a contract in place, so that you diffuse the panic in them.
So that depends on the seller. I give them the option of doing that, and I introduce myself to everybody when we're doing photos and things like that, right? And I let them ask all the questions. I let them get their freak out on me, right? If you're gonna freak out, do it to me, not a buyer. Some of them are like, I do not want them to know at all, ever. And I'm like, well, at some point it's gonna get inspected unless you wanna do a pre-inspection. But, so then what we do is I can't not take photos because you have to have a good listing if you don't want people to know. So usually what we tell the tenants is that there's new insurance coming and that they need to do some baseline photos. And so please have your unit ready to do the baseline photos for the insurance company. And then by the time they find out that they were lying, the building's almost sold. And then I have to deal with it anyway.
Random question. I know of like this lot of condos that are going for sale, and it's one seller, but there's 9 of them, but they're all individual properties. So would that, like, liability wise, would that be under commercial? Like, you should have, if you're representing a buyer on that lot, would you be a commercial agent at that point, even though it's not like a multi-family.
It's individual.
Yeah, it's one seller. It's a condo complex. The seller owns 9 of them.
So the question is the seller owns 9 condos in a complex. 6 or more. And so it's gray area, is my opinion. You say 6 or more. My advice is yes, always default to the side of caution, right? Loop in whomever you think you need to, even if just to ask the questions.
Yeah.
I've only sold stuff like that, so I don't know what that would be like from the residential side, but we do those as like portfolios is usually how I sell them.
And the listing agent was presenting it like residential, like each has a lot, each unit would be worth this, not as like a commercial building.
9 different listings versus like the portfolio, and that's seller driven too. So if that's how the seller thinks they're going to net the most, it depends on their exit plan too. Like a lot of my sellers are doing 1031 exchanges. There's no way they would have 9 different listings with 9 different closing dates when you have a 45-day identification period from sale 1, right? Because if sale 9 happens at 44 days, they could be very screwed because the IRS does not move that number at all. They have moved it once since 1972, and that was for COVID, and they added an extra couple weeks. Yes, ma'am.
I was just gonna add a comment to hers is be careful on those condo package things because on the financing side, because depending on how much percentage of ownership they have in that community, their financing could get denied or tied up. So
that's what I mean. So for most investors I work with wouldn't touch it as individual listings. They would do it as a portfolio because they're already an investor, which is already affecting the other people that can buy in there, whether it's a conforming condo or not, and like what their down payment and stuff would be. So we would always just sell it as a lot. That's a good, interesting question though. Okay. So that's really it. That's multifamily in a nutshell. And then just the bigger you get in the units, the same information, just more, right? Your rent roll is now, instead of 6 names, it's 600 names. Your leases, instead of 6, there's 600 leases. It's just more to manage, which for us, that's why we pair up on things, right? One person can only do so much. It's not really in your client's best interest to always just have you. So if you go to the second to the last page, I have a little not assignment, but how many of you get like wholesale listings? You see them on Facebook, you get them in email, they make it sound like it's such a good deal because it's off market. How many of your clients want off market stuff? Like, so you're just like, yes, there's a wholesale deal. Have you ever looked at them, especially from a multi-family perspective? If you've seen any of the single-family ones, I know you guys probably do what I do, which is like, right? Your ARV, your actual retail value, no, that's wrong. I don't know where you're pulling. That's not a comp. You can't. It's for sale. It's active. You can't do that, right? Like we know that, but I don't. And I think they do too. I think they're trying to kind of pull the wool over people's eyes. So they do the same with multifamily. They do this a lot of these like smaller ones. They can't get away with it with the bigger ones, but they can with the smaller ones. This is one that came up in my inbox when I was printing this out, and I was like, oh, here's a good example. Okay, so this is super sexy for everybody looking at it. I would totally live here. Like this is awesome, right? It's in Tucson. It's a duplex standalone on one lot. Tenants in all 3 units. 1 bedroom, 1 bath, 2 bedroom, 1 bath, 1 bedroom. The 1 bedroom, 1 bath stands alone. One is month to month. The other 2 have leases. They're up in December and January. New roof recently, but minor touch-ups. Probably needed on all 3. That sounds like a lot of information, right? No, it's like a fraction of the actual information that you need to evaluate the property.
Especially if they have 3 tenants in a duplex.
Well, so first,
Red flag number 1.
yeah, red flag number 1. The standalone unit, and this kind of goes back to what you were talking about back there. The standalone unit makes me start going, was that permitted? Does it have a certificate of occupancy on it? Can anyone actually live in that? Because if they can't, you're not going to get lending on that. Because that's what the lender and the title company will start asking too. If it's zoned to only build 2 units, then why is there a 3rd? So that's some of the like red flags that happen when you start to see those standalone units versus the attached ones, is you start questioning them. So if you did build that, just make sure you're calling the city like we talked about earlier and, you know, going through everything you need to go through. So that would be my first question.
If the buyer was gonna live in that standalone unit and rent out the other 2, would that help?
Not if there's no certificate of occupancy,
Oh.
because they still won't get lending on it. Yep. That only helps their down payment. That's called house hacking. Does everybody know what that is? So house hacking is when you take a residential 4-unit and under property and you live in one and you rent out the others. So that then you can get a low down payment conventional loan. VA buyers can do it. FHA buyers can do it. And if you get a decent lender, call me because I know who they are. Then you can apply the rents for the other units to your overall income in order to qualify for a more expensive property.
House hacking?
House hacking. Yes, it's a hashtag I use a lot on my Instagram.
Can you do that beforehand though? Will they allow, some lenders will allow that beforehand?
What do you mean beforehand?
Meaning it goes into you qualifying for it, or do they actually take that into account as you're already, as income you're
So some of them will
already-
do it in the pre-qualification period, like, hey, I'm looking in Mesa, hey, the average rents are about X, and so they'll do it as kind of a pre-qualification, knowing that that's what you're doing. But for the most part, they still need to see the actuals once they happen. So then 2 things happen, right? If you have an underperforming property, you're not going to get lending on it because you're not going to have enough rents to make up what you need for, you know, the other sides of your financing. So they don't care how good my performance is. They give no Fs. They're like, that's not what it's doing, so that's not what you're going to get. The other part of that is, what other question do you think you have to ask? Can you actually live in one? Is one empty? Is it month to month, or do they have a lease? You can't break someone's lease if they don't agree to it. So if they can't live in one, you're now committing mortgage fraud, and you don't want to buy those. So if you call me and you're like, hey, just happened the other day, I like that fourplex you have listed in Mesa, and I'm like, thanks. I have an FHA buyer. We're going to put an offer in. Huh? You don't have any questions for me? No, it's a great property. I agree with you. Your client lives out of state? Okay, sure, submit that offer. That's mortgage fraud. I'm not doing that. I'm not putting my seller in that position.
Yeah, so I know some of the tenants are on Section A for multi-family units, right? So do you recommend your client to keep those, or
So, I don't answer questions with my opinion. I answer questions with facts, right? And so here's the facts. That is a government subsidized rent. You have to find out what the government subsidy is and what the tenant responsibility is, because those are two different numbers. And then whatever they choose to do with that information. Some of my tenants love Section 8 because during COVID they all got paid. He was like, this is great, right?
My clients loved it.
Yep, I mean, there was a great opportunity, and then some people, not so much. But if they're already in place, you have to ask, why don't you want them? Because then you can be crossing over into fair housing issues, and they cannot cross over into fair housing because they're about to be a landlord on this property. Yeah. Mm-hmm.
On your multifamily side, do you or have you dealt with selling off, either acquiring or selling off like apartment complexes, say like 100 plus tenants? My home group does kind of work with that.
Yes,
okay.
We do. MHG Commercial
okay.
does, because we're at my home group commercial brokered by my home group. That's where MHG Commercial comes from. So we're available to everybody.
And then upon acquiring any property management, or is that like a whole separate piece that
we don't do property management?
Okay.
Yeah, we have contacts for that on large scales and small scales. My home group has a power partner also that does property management, but so that's available. And then some of them on some of those larger units, they have live-in property management anyway. So then that's a whole nother layer of complexity when you're taking on a multifamily property. Is there's a salary involved, there's employees involved, are they 1099, are they, yep, do they have insurance? Yes.
Hold back.
Yep. So that's why it's really important to loop somebody in. But yes, we do.
There's a lot of, in the valley, a lot of these houses are adding a bunch of rooms to them and then sort of renting them out like healthcare and all that. What is that considered a multifamily?
It can be if they did it right, if they asked the city for a variance and went in and did all the homework we were talking about before.
Really? Okay.
But technically it's a business inside of a residential property.
Yeah.
Yeah.
And those have to be 10 beds or less.
10 beds or less.
Really?
Yeah. I don't like them, so I don't sell them.
She doesn't like them. We like
Call Aaron for that, yes.
But yeah, 10 beds or less in the residential, otherwise it's gotta be full commercial. Once you get to 11 and 12, you have to have a commercial kitchen and all those other fun things.
And here's why. It's because they are supposed to have very accurate records. They're supposed to have very clear books. What you would find in most multifamily is no one does. Even the property manager I have to pick apart. It's that times more. So if I'm doing it on my own, I'm like, ugh. But we have a team that's pretty good at handling that stuff.
With with partnering up with an agent or taking over one of our clients, what kind of fee structures do we supposed to be?
So it really depends on what it is, right? I would encourage you to sit down and talk to us and we're very upfront about the work involved and what that all is. Typically, on sales or purchases, we pay a 20% referral, and then typically on our leases, we're doing 10%. Yeah. So, and then there's a cap too, because we get capped too. I mean, you saw how expensive some of our tools are, like just CoStar alone. Yeah.
That's on our referral?
Yes.
And then we can also partner up with you?
Right. So, and that looks pretty similar depending on your level of experience, which is why we encourage, just come talk to us, come down to the Chandler office, or let's go out to lunch or something and talk about what that looks like. Yeah.
We're working with someone that does big apartment complex and they do syndication, so there's a lot involved in that, like attorneys and all this stuff. We just want to know that that's something that you guys do too.
Yes. So yes, with syndications, so syndication, for anyone that doesn't know, is it's basically, think of it like crowdfunding, right? Like I secured a multifamily property, I have what could be a down payment or not, I've secured funding, but I need a crowd fund of X amount, right? And in return for that, you will get X% upon sale or over years or however that's structured. And then typically the syndicator, now the owner, the LLC, takes it, adds value, like we talked about earlier, makes it all shiny and pretty, puts new leases in place, and now it's a performing asset that then they sell. So two parts. Part one is the acquisition. In commercial, we deal with attorneys all the time. We are not the only chefs in the kitchen, I'd say 99% of the time. So we have to loop in other brokers, we have to loop in attorneys, there's usually partners, we have multiple conversations with whatever that looks like. The syndicating part of it, that's up to them though. We can't, I don't want to say can't, we don't typically help them source funds. That's something that they need to do on their own. But the acquisition, yes, and then the sale as well. So then let's go back to the beautiful wholesale one, because we just talked about zoning. We haven't even gotten into the weeds here. Like there's so much more stuff here. So okay, we don't even know if anyone can actually live in the extra one that they built. When was it built? How much older is it than the other ones, right? There's no details for that. One is month to month, the two other have leases up in December and January. They do go over the rent, but why is the rent so much different? If the standalone one is a 1 bedroom and one of the units is a 1 bedroom, then how come there's, $40 difference a month? That's a big jump. Who pays for the utilities? Do I pay for all the utilities? Do they pay for all the utilities? Do they share utilities because one of those was built after? Are they doing what we call a RUBS, which is you just pay for it and then sell it back to them? Right? There's so many questions that they're not answering in there, but they sure make it look super attractive. So I just ask those questions all the time when you see wholesale deals, when you see things on Facebook, when you see the mess I was showing you earlier with all the zeros. Just make sure you're asking all the questions, and if you are afraid of what to ask or need help asking, then loop one of us in and we can absolutely help you do that. Is there any more questions? Then you guys are free to go. Or chat me after. Thank you.
Let me just say one thing on that. I don't know if she covered this at the beginning because I had to step out and put out a fire. But you're all welcome, she kind of mentioned it, to come and sit with us. We have a Tuesday meeting every Tuesday in the Chandler branch at 11:30. Did you talk about this?
No, I'm laughing because you called it a Tuesday meeting on every Tuesday.
Yeah, every Tuesday. We like redundancies and special. We say a lot of things 2 and 3 times. And a lot of acronyms. But you're all welcome to join us. It's every Tuesday at 11:30 at the Chandler branch, and we've got plenty of team members to help you with any transaction, whether it's multifamily, retail, residential, commercial. We're happy to partner with you and go through the deal. A lot of this team is built by partnerships. We started partnering with someone and then they went, oh, this is awesome, I want to do more of this. So we're happy to help you with anything you have on your table. So thanks for being here today.
Yeah, thanks guys. We're available for questions after as well.
There should be lunch.
Yes, soon.
Yeah, it should be here any minute.
Yeah. If you didn't hear that, lunch should be delivered any minute, and so Kelly has it coming in to thank you for your time.
Thank you.
That meeting for the Chandler, my husband, yeah, okay.